What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I made a change to my M1 Finance dividend portfolio. I'll show you my strategy, what I plan on doing. I did get the stimulus check, and I'm just waiting until another paycheck comes in so that I can put money in my M1 Finance dividend portfolio. But I really like this ETF, and the monthly dividends you really can't say no to. It is very high up there. It's very nice. I really like the way it is, and it's involved and incorporated with some very good stocks, which I will show you the stocks. I'll show you how Morningstar likes this, and this is something I can't say no to for my passive income and for my M1 Finance dividend portfolio. I might have a goal to make $1,000 to $3,000 a month my monthly dividends and $2,000 to $4,000 a month my quarterly dividends. Eventually, when I flip everything, I'm going to get a lot of money from this stock, monthly dividends. But right now, these monthly dividends are just buying more stocks for me in my M1 Finance portfolio. And this is what I really like about it. It's strong. It's a high yield dividend stock. And it seems like it's very reputable throughout the dividend investing community. And it's a great stock for passive income. And it's something that I, as a dividend investor, I really like. I'm not normally a fan of ETFs. I'm really picky with ETFs, but this is something I can't say no to. So let's check it out right now. So that stock would be the Global X S&P Covered Call ETF. So I myself, as a investor, dividend investor, when I'm working or I'm busy doing papers, I can't buy, sell, trade in stocks. But if you look at QYLD, okay, this is XYLD. This is Global X S&P Covered Call ETF. It's $47.67. In the past 5 years, okay, here, there, not too bad. But obviously the S&P has killed it. But for $47.67, what am I getting out of this stock? What am I getting a good bang for my buck? So again, if you're in these covered call ETFs, you better want the Benjamins. You better want the money from this stock because QYLD has done a phenomenal job. I have it in my M1 Finance dividend portfolio. But this one is really cool. And we're going to go over the stock. We're going to go over the expense ratio. We're going to see what Morningstar says. This is kind of like a brand new stock, even though it's like 20, early. It's kind of early, 2013. But the big question is, you're going to get a good bang for your buck. So we need to look into the stock. When you buy into an ETF, you need to know what's in it. Okay, what stocks are in it, the expense ratio. You need to do a little bit more in-depth analysis before you even make the call on buying it. That's my honest opinion. That's why I hate looking into ETFs. It's a lot of homework. You got a business development company like Gain or Maine, you know what you're getting. So let's check this out. Okay, so Global X ETFs, their expense ratio is 0.60%. The distribution yield is 10.40, and that's monthly. So when you look at this stock, okay, are you going to get a good bang for your buck? What is in this ETF? Okay, so basically Global X covered call ETF, I'm just going to read verbatim. It's a covered call ETF, follows a covered call or buy right strategy in which the fund buys stocks in the S&P index and writes or sells corresponding call options in the same index. Okay, so let's see what's going on in that. Okay, that they're telling you it's for high income, monthly distributions. What is in this stock? Okay, so they have Apple, Microsoft, Amazon, Facebook, Google, Tesla, JP Morgan, Johnson & Johnson, Visa, Disney, United Healthcare, Nvidia, Procter & Gamble, MasterCard, Home Depot, Bank of America, PayPal. So they have some very good stocks. Netflix, Abbott Laboratories, AT&T, Coca-Cola, Chevron, Pepsi. So these are a lot of stocks that, I'm highly considering buying. I had Disney and then I sold it, but this is really good portfolio. And 5% is Apple, 5% is Microsoft, 4% is Amazon, 2% is Facebook. So this is a pretty good overall. And let's see what's at the bottom. They got Domino's. So these are some really good stocks. If you look at this is the important thing. So we see some good stocks. eBay is actually a good stock. The board of directors actually made the call to have eBay as a dividend stock now, which is, I think that's a good idea. I honestly think that the way that a lot of these companies are going to be are distributing dividends. Some people say they won't distribute dividends, but excuse me, I want something out of it. I'm not going to invest in a company unless I'm getting something out of it. I know you guys are like, buy Tesla. Well, they don't distribute dividends, so why? I'm not going to deal with them. Same with Amazon. Sure, it's great growth stock. Same with Facebook, but what am I getting out of it? I want to get something out of it. Sure, it's going to grow and buy and sell and this and that, but I want to get dividends. My goal is to earn passive income. I'm going to stick with that strategy. So that's what I plan on doing. So we see this, we see what's in this stock, okay, or this ETF. Apple, these are good, reputable companies. These are a lot of stocks that people own. Dividend portfolio wise, JP Morgan, Apple, Microsoft, even have Berkshire Hathaway B, Johnson & Johnson, Visa, Disney, United Healthcare. So these are good dividend stocks that people own. Bank of America, Exxon Mobil, I have Exxon, Verizon. That's one that's on my radar and will continue to be on my radar. So these are good stocks that I like, that I'm seeing right now. Good dividend distribution with a lot of these dividend stocks, and some of them aren't dividend stocks. So let's see what Morningstar says. Okay, that's not bad. It's a 3-star. I like the 5 stars. Morningstar is very reputable with, if I see a 4 or 5-star ETF, Morningstar is a very good indicator with ETFs. This is again, with an expense ratio of, 0.6. Okay, it's a little high, but you're going to get a good bang for your buck. I know that VYM is a ETF by Vanguard that has a very low expense ratio. So, the expense ratio is a little high. Morningstar gives it a 3-star, but this is why I'm going to show you why I'm going to buy this ETF and why I have it in my M1 Finance Dividend portfolio. I'm going to jump to my M1 Finance Dividend portfolio in a second, but we need to see the dividend history and why this is a stock that I'm buying. The 10% dividend yield, which they say on their website. Why am I going to get something like that? It says 12-month yield 8.67. Looks like on their site it's 10%. Let's look at the dividend history. Okay, so 7/2020, obviously it took a nosedive because of the pandemic, but we're getting around 44 cents. Right around 44 cents. Okay, 44, 45, 44, 47. I like what I see. Okay, so I got QYLD. I got XYLD. We're getting a good bang for our buck right now. And I'm going to continue to buy this bad boy. Let me show you what my strategy is right now. I bought, sold, made a few moves, but I'm going to show you little changes that I made in my M1 Finance Dividend portfolio. So we're going to jump to that. Look at that, ladies and gentlemen, $16,000, 508 earned dividends from the Death Star. We are getting right to where we want. We're getting closer to a dividend portfolio of $100,000. slowly but surely we are getting there. Okay, $508.21 in earned dividends, sitting on my ass doing nothing. That's a deal. By the way, if you are interested in signing up for M1 Finance, just feel free to click my affiliate link. I'll put it in the comment section. You get $10, I get $10 for starting up. Look at this. All right, so here's my strategy now. QYLD I have at 4%, XYLD I have at 2%. And I also made a change real quick to my super REIT. So I had Gladstone Commercial Corp on my E-Trade dividend portfolio. Actually made a little bit of a profit, and I'm selling it and throwing it into EPR Properties because EPR Properties is down, and I want to get, they're going to start distributing monthly dividends again. I'm probably going to post a video on this stock and why you should capitalize on it before it goes back to where it was. Gladstone Commercial Corp, okay, is a monthly dividend stock. It's right around 12 cents. It slowly increases its dividend, but it's a very good stock to get a good bang for your buck. It is a real estate investment trust. So, you get 12 cents, 12 cents, 12 cents. Look at this. 40 cents, 20 cents, 40 cents, 20 cents. Look at it's just going to start adding up, okay? And then more and more money each month. Boom, monthly dividend. Boom, monthly dividend. Boom, monthly dividend. Boom, monthly dividend. And then boom, monthly dividend. So I got these stocks throwing in monthly dividend stocks. The compound interest is starting to get bigger and bigger. So as I add some monthly dividend stocks and I lower the ratio on other stocks, I'm going to continue to have this at 4% and 2%. I might put this maybe at 4 and put Lumen Technologies down 1%, and maybe my super rate down to a percent, because I want money. I want a passive income cash flow, and I want monthly dividends so that I can start buying other stocks. And these two are really giving a bang for my buck. Unfortunately, RYLD is not out on M1 Finance, which is a shame, but I will be putting RYLD on here so that way I can start really racking up the monthly dividends to start buying these quarterly dividend stocks and just start going crazy with my dividends. So I know, I'm still putting the brakes on in a lot of my stocks, but these quarterly dividends, which are going to increase. Now these guys normally, QYLD and XYLD normally don't increase their dividends. I doubt XYLD will ever hit 60 cents or QYLD hitting 30 cents, but their goal is to give you passive income. And what you can do with this strategy in M1 Finance is just keep on buying these other stocks, because that's what the goal is with these. Buy more shares of these stocks so that these can buy more shares, and then these start buying more and more and more. So things are headed in the right direction. First Energy, I'm going to lower their percentage shortly, but I want to at least get to 25 shares. So I got to give Exxon some attention a little bit, but this is the plan. It's kicking in. It's really starting to kick in, and now I'm at $508. Okay, can you imagine just making it to 1,000 on here a month, and then reinvesting and reinvesting and reinvesting? How many shares and that you can buy with all this, and let the compound interest kick in? So I'm starting to get to the point where I'm going to focus on other sectors. But right now, I want to buy more shares. I want to get stronger. I want to get bigger. I want those dividends kicking in. And I want that passive income to kick in so that I reach my goal of $1,000 to $3,000 a month in my monthly dividends $2,000 to $4,000 a month in my quarterly dividends. That's rational. That's realistic. Some people have done way more than that. But look, it's like I'm getting myself a raise over time. These are good companies. They adapt. They know what they're doing. Okay? That's what I like about this. That's why I'm not backing down from a lot of these stocks. So I'm going to get a good bang for my buck with these stocks right here. Monthly dividend stocks are good to pay for your quarterly dividend stocks in M1 Finance. So let me know what you think of this video. Let me know what you think of XYLD and the combination of QYLD. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Welcome to my channel. Everything's free on here. All I ask you to do is smash that like button, subscribe, be active on my channel. You hit that notification bell, you are not going to miss future videos if you hit that notification bell. I try to post at least 2 to 4 videos. I'm going to still try for 3 a week, 3 or 4 a week. So just keep on looking at my channel. Just search Darth Dividend, subscribe, check it out. Let me know what you think. You guys have a good one.